Hello, I'm Grace. As stock market volatility intensifies, warning signs are emerging that the debt repayment capacity of individual investors is deteriorating rapidly. According to recent reports, the delinquency rate for loans from minus accounts, a type of flexible revolving credit line popular in Korea, is rising sharply following the recent stock market downturn. Analysts suggest this surge in delinquencies is a direct result of an increasing number of individuals unable to meet repayment deadlines as their asset values plummet. Data reveals that delinquency patterns vary significantly across different age groups, highlighting an intensifying crisis among socially vulnerable populations. For the younger generation, the trend of bit2, a Korean slang term for aggressive investing using borrowed funds, has come back to haunt them in the form of insolvency. In contrast, the elderly face a more structural crisis, where investment losses transcend mere asset reduction and lead to immediate shortages in essential living expenses. Both groups are suffering from the double burden of declining assets and mounting debt, placing them at high risk of falling into the category of financially vulnerable classes. Comparing these two demographics, while the crisis for the youth is characterized by investment failure, for the elderly, it is a matter directly linked to their right to survival. The ease of use associated with minus accounts makes it difficult to intuitively grasp the true scale of debt, which further exacerbates the underlying risk. A vicious cycle is forming, where individual investment failures lead to delinquencies, which in turn trigger a decline in credit scores. This rising delinquency rate is likely to escalate beyond individual problems, potentially evolving into a systemic risk that threatens the stability of the entire financial sector. If volatility in asset markets remains unchecked, the qualitative deterioration of household debt is expected to persist for the foreseeable future. Ultimately, financial market volatility must be closely monitored to prevent stock market declines from leading to a practical collapse of the grassroots economy. Alongside individual efforts in credit management, there is an urgent need to establish social safety nets capable of responding to such financial crises. I'm Grace, thanks for watching.